Good morning, everybody. This is Dan Hussey with AUDJPY.com. It is currently, I believe, 9:20 GMT on September 19, 2013, and this is your London session morning report. Let's actually begin with two charts that kind of had on the back burner, the FTSE and the DAX. Beginning with the FTSE, this nice and big for us. There we go. From a let's step out to a daily perspective. We're coming up off of daily full halfway back long with upside targets of the 68.77s. Inside of this trade, we've broken shorts and we pulled back very quickly into a full long, which really kind of traded a massive front run here. So I see us in longs. We're heading higher. There's no reason to be a seller of the FTSE at this time on the larger time frames. Going down to a 5-minute chart, I think it's now kind of important to try to determine where we are in trend, and really the FTSE has just been moving or making very big moves that I really haven't talked about it on any time frame less than a 4-hour trend the entire summer, because the moves have just been very quick, kind of erratic, and you can see how this is just chop. But we are still trending higher. We're making higher highs and lower highs. I'm sorry, and higher lows. So very, very of course. So again, heading higher. Ultimately, the cleanest trade we have is off of this support level down here at the 63.70 or 60 area, with upside targets of the 68.77s. The DAX, on the other hand, has been far cleaner and much more technical, in my opinion, stepping out to a daily chart like the S&P. And the other day we had up a chart of the S&P and the DAX next to each other. We'll look at the S&P in conjunction with the DAX here momentarily, but we are watching daily extension longs having traded already from the 76.70 lows here, and looking for upside targets of the 89.48s. The 89.48s are effectively the same level as our larger 17.40 upside targets for the S&P. So why don't we go ahead and do that now. I will bring up keep our DAX daily chart right here, and over here, I will in just a moment bring up one moment. Charts. Bring up the Dow, and the ES. Sorry about this. I'm kind of getting this ready. Anyway, okay, there we go. So you have the DAX, YM, and the S&P. the DAX and the S&P are virtually at the same place in their trends. They have both come up off of these long levels, the 76, 73s in the DAX and the 57, 77s, or 15, 77s, excuse me, in the S&P, and are getting nearer to their upside targets. The Dow is lagging a little bit, and inside of both of these trends, to kind of zoom in here for the DAX, it did pull into a full, long for its summer session. Just like the S&P, if we zoom in a little bit here, also pulled into a full long for its summer session and traded full traditional halfway back. So both of those markets are just moving lockstep with each other right now, and it's not something to ignore. I mean, granted, equities across the board have shown us a bullish trend. We've been bullish since the start of the year, and really we've been bullish for quite a long time now, but nevertheless, we're looking at some pretty big confluence of markets heading to all-time highs, and not really looking back. Something I really want to point out, and we'll do this with the S&P real quick. I have never looked at the DAX in this manner. The Dow is very similar, but I'd like to remind people, stepping out as far back as you can on the S&P, assuming that 0 is the start, if we started from 0 and draw up to all-time highs, current or prior all-time highs in the S&P, we held a full halfway back long. And this is actually a very similar level we're looking, for like gold to move down into, and we'll talk about that in a minute. But this 800 area was a full halfway back. I mean, it was very simply the 50% retracement of, from 0, the start of everything, to current all-time highs. And this isn't the first time the S&P has done this. In the 70s, it pulled into a full halfway back long. In the 40s, it held a very similar extension long after it came out of the Depression and out of the war. So, I mean, using the halfway back system has worked on the S&P as far back as time allows. Nevertheless, we do have current upside targets, and you can see how when we put this trend in a bigger perspective here, you can see how a 1950 target, we're so much closer to that than we are to the lows just 4 years ago. And going back and looking kind of back in time here to the SE 500. Here we go. The SM here is that we can actually take this charting package and go all the way back to 1929. But most importantly, what I want to go back and look at is the full halfway back long that traded back in 1975. That is this 50% line right here is what that represents. And unfortunately, let's see if we can get a good shot of it. There you go. Back in the 70s, in 1975, there's actually unbelievable the way this works out here, and I'll show you something that we've gone over multiple times in the room. But we pulled into this full 50% long, just basically starting from 0 up to all-time highs at that point. In 1974 through 75, we pulled back into a full halfway back long at the 62 level. Now, notice that the prices that we pulled and moved away from were roughly a multiple of 10. Just one generation ago, inflation has taken us a perfect multiple of 10. And I say one generation ago, I mean, this is, right around the time that my parents were my age. Now me being, 30, 40 years later, now 30, 40 years later, of roughly, one full generation, right? If people have kids around the age of 30, it's about a 30 to 40 year gap between generations. We've, inflation-wise, have moved just one decimal place over, and price inflation, and we have the exact same price structure that we had back in the 1970s. Something else that's really important to note, and we actually need to pull up a monthly chart for this one. And I'll zoom in a little bit and we can look at the same price structure on a monthly chart. But there are two important crosses, and I've kind of drawn lines here to try to continue where those lines kind of would have projected. But back in 1932 or 31, we had for the first time in history at that time, the 200-month moving average crossed over in the 50-month moving average, had a death cross. In other words, the 50-month moved below the 200, and they stayed below until 1946. Since 1946, and ever since March of 1946, the 50-month moving average and the 200-month moving average have never crossed over. They came darn close. They came really close, but if you look, there was no cross. And that's actually very similar to what happened again back in 1975. They came really, really, really close to crossing, and then didn't. They rejected, and price eventually moved off of the full 50% long. Remember, this is that full 50% long. After that full 50% long, the all-time halfway back held. We had a test of the 50 and the 200-month moving average, which rejected, never crossed over, and ultimately price then continued on all the way up, not only in two new all-time highs, but to the 147 targets at the time. Fast forward here to 2000 and the 2000s, the new millennia, we have exactly the same price structure. A test of the full 50% long, a bounce off of the 50-month and the 200-month MA, and price moving up to a 1950 target, somewhere in the above 1900 target. We were, ironically, I'll pull up some old videos from 2011 through 12, and I can show you exactly how we were looking at this back then. And I actually got laughed at by a few people saying that we were going to go to 1900 in the S&P when we're trading at 1300. But hey, that's trading. The fact that this has been an absolutely, complete repeat of what is just one generation ago, price structure in a market. I mean, you can't make this up. I mean, if you don't believe that the world if there's some kind of structure to the chaos of the universe after seeing stuff like this, I don't know what else is going to prove it to you. But anyway, that's neither here nor there. Major moves in the S&P and the equity markets, so really important. Now, I'm not saying that we can't pull back 2, 3, 500 points in the S&P. As a matter of fact, back in the 70s we did, after pressing up into new all-time highs. In 1974, we made our low, and we had a pretty solid top only 7 years after, and right going into 1980 and 1981, right? I think a lot of people remember that day. There we go. We are roughly now, we are only, 2009 were our market lows, 7 years out, maybe accelerated a little bit. We'd be looking for, maybe that same top before a really nice big pullback at some point in time. I'm not going to be a seller. I'd be a buyer in the dip, and a buyer the whole way up, because this is long term. You'd be fighting a huge long trend. Anyway, point being is, at some point in time we will find market top, and we will take that dip. And actually, back then it was a full long that traded off of our lows, recession lows, to highs after. It traded a full long again. So markets are incredibly technical. They follow the halfway back system. I don't need to prove it to you guys. I think if you're in here, you're already a believer. But regardless, that means a move down to like 1300. So something I like to keep in the back of people's minds, if you're kind of long-term swing trading or managing a 401k account using this type of methodology, we are up at new highs. This is not a place for the really long term to be initiating new positions, but it certainly is a there is absolutely nothing wrong with the trend that we've seen in the S&Ps. So going into tomorrow, we have a kind of support levels down now at the 1713s in the near term. The 1706s is really where I see support, 1707 area. We have a gap fill of a 1718 tomorrow morning, so we'll see what happens. It is options X tomorrow, so we are going into options expiration. This is where markets get really funky, so we don't actually look for a gap fill. We could just continue to squeeze higher. Alright, so let's move just right into it. Let's head into the pound. The British pound, from a daily perspective, we are running up and into trendline resistance here on the British pound. These two trend lines represent actually a kind of a massive wedge that the pound has been inside of for going on 3-4 years now. Since this is the high end of a range, I'm cautious about longs in the unless we start breaking through, unless you believe we're going to break out of this right here and now. There is the potential to do so. We have traded a series of longs, traditional off lows, then entry lows to target highs, a second in the series, which blew out of targets, and we actually have a valid daily extension long drawn from the 157.20s to highs here, which comes in at about a 159.50 support level on a daily chart. Going down to an hourly chart, however, we have really had a great short squeeze up, and we are watching for the British pound to hold support down here at the 160.60s. So a failure of the 160.60s, 150.50s is next. Any failure here, shorts come into play off the top because we are running into trendline resistance, and I'd be cautious about a long, considering this is the top end of the range that we have been in for the pound for quite some time. The Euro US dollar. Stepping out to a daily chart, we are a couple major things I want to point out in the daily euro. For starters, from all-time lows at around an 82.60 to all-time highs right around $1.60, the euro pullback off those highs, which are off the chart to the left, has never broken below the 21. I mean, we dipped below it, but ultimately every time we have bounced off of the 121 level, which is the all-time halfway back long for the euro currency. Not including if you were to impose a synthetic euro from before the euro currency's inception, using like the Deutschmark and other European currencies before that time. But the true euro currency, the euro dollar, since its inception has held a full halfway back long, and technically has on a weekly chart a 178 upside target. So again, just that's kind of a back of the mind thing, could be years away. Inside of this, however, after our last bounce up off these 121 30-ish area, we pulled back into a full daily long and have defended the 128 figure, which is right about where the long is. Upside targets on this daily long are at the 141 level. Dipping in further still, from a 4-hour chart, we actually broke the short against that long, and after breaking that short, we pulled into a full long. That long we actually participated on here at Elga Day Trader at a 131.08 with a 136 upside target. So that trade is clearly going to targets here. Breaking down still into a 1-hour chart, coming up off the 131 lows, we began to move straight in extensions. There was no traditional pullback to get in on. It has been straight up in extensions. And extensions are drawn, in the case of longs here, in a bullish trend, highs to highs. So it was a 131.90 anchor to highs that started the trend. It held the 32.60 or 32.36s, traded to targets. Now, once an extension trades to targets, we take its same anchor, new high. The 32.50 58s, traded twice, once on Thursday and last Friday. We then gapped up, which is very typical in situations where we have a substantial gap in the market. We will move right into the limit orders that reside at targets for the algorithms. So the 132.60s held. We gapped up to targets. Same anchor, new high on the euro has never traded. We traded a traditional after the extension. In other words, the entry level from our prior targets, or from the prior trade at the 32.60s, we traded an entry low to target high halfway back long, and it was actually front run. After trading a traditional after an extension, let's drop the original extension, the market will begin to move in extension longs. In the case of the euro, we would be looking now for a 133.25 anchor to highs extension long. In other words, we use the prior highs to new highs as we begin new extensions. Support now in the euro resides at a 134.50. Below a 134, shorts could be, ambush shorts could be drawn up, but ultimately we're still looking for what is going to take us to the 136.20 targets that were from the prior, larger 4-hour long. Okay, and remember we have 141 targets as well. So if we trade this 131 entry to its target, we'll drop the next in the series long, which is a 131 even, to target highs, which technically the euro could pull all the way back. It could pull into a full halfway back at that point too, fill its gaps, and then continue higher to a 141 target. So we'll see what happens. We have orders currently at the 34.30s. They need to be updated because those were put in with the prior extension. Now we got to, as we make new highs, we have to continue to draw this extension higher. If we do fill the larger time frame target, we'll pull all orders and stop looking for this extension long. But anyway, that's what we're seeing on the euro currency at this time. The Aussie yen, or Aussie US dollar, from a larger perspective, we have broken the series of shorts, extension shorts, that took us down and into these lows. One moment. We have now broken back above this kind of multi-year inflection point for the Aussie. It was simply prior highs and prior support levels multiple times. And while we tested below it, we are actually back above this level. So that it's this 94 figure that seems to be pretty important in terms of it was a market top, it was a market bottom, and we don't ignore stuff like that. Now, the Aussie US dollar could trade into a full halfway back short all the way up at parity. So revisiting parity here would be very important for the Aussie. Now you can't Alright, so again, ultimately we're looking for the Aussie US dollar to pull back into the 92 figure for a full long. Eventually, we wouldn't be as sellers to take it down there, but on the larger time frame we could have a full short up and around parity. We were able to reverse engineer extension longs that have traded up and into these levels. Again, similar to the euro, we're looking for a 93.56 anchor to highs for the kind of next full extension long. That could take us up and continue the trend and continue the series up off of these lows, and that support comes in at around a 94.50. Okay, below a 94 at this point we'd be looking for the full pullback into the 92s. I want to kind of move right into gold before we get into the yen crosses. And gold, very much like the S&P, is kind of at a similar inflection point in terms of a long-term trend. Gold has broke its very long-term weekly trend that had an extension long holding and flagging for multiple years. Now that that extension long is broken, we are actually looking for a daily or weekly full short off of the highs in gold at a 1550 to trade. We were able to see and determine that there was a potential extension short, or gold started moving lower in extensions, and there was a potential daily extension short that originally traded at a 1350. Upon failing, the market pulled into an ambush long in the direction of that daily short. Okay, an ambush long in the direction of that daily short. If you're an Elliott wave person, this to me looks like 3 waves down. We'll be looking for a B wave up, and then a sharp C wave all the way back down to a 960 to trade the all the way halfway back all-time 50% long in gold, which if you're a gold bug, be patient here. You're going to have an opportunity potentially over the next few years to get in at levels that you may never see again. Okay? So going down to a 4-hour chart, you can clearly see the 50% long that's traded off of prior lows. We are just sitting on that level into FOMC today, and the second that news came out, man, gold was a rocket ship. And Fed days, gold. You can count on 3 movers on Fed days: gold, yen, and treasuries. The 10-year, gold, and the dollar yen all moved huge, and of course the U.S. equity markets moved as well, but nothing moved as much as these guys did. I mean, we're talking a 5%, well over 5% move in gold. We are running now into resistance at a full short off of the prior highs, which I can only put up here as a watch. This would never have been a trade we would have been taking, but we did see initial resistance. I mean, that's where limit orders were for gold. Anyone trying to sell gold was doing so right here. So we may very well run into a range until we break either the 1380s or the 1270s, but personally I see us going to at least a 1550 in gold before continued downside in terms of longer time frame. We don't look at gold on anything below really a 4-hour chart, because price moves can be so erratic that you just cannot discern them. Okay, the dollar yen stepping out to a huge daily chart here. We're looking at extension longs. We're looking at an extension long drawn from this 84 ish high to 103 highs. We've been flagging sideways in what everyone is calling a triangle. The question is this triangle complete? We have the makings for a completed triangle in an A, B, C, D, E wave. Okay? We also have the makings for broken trendline resistance, now holding twice as support. There's a reason I'm trying to get long the dollar yen here. This looks like a potentially great swing trade all the way up to the 108 figure. Granted, I'm only going to look to take it to 101.70s in the near term, but this is but I personally love triangle breakouts or breakdowns. There's nothing that says that we couldn't fail longs, trade into a short, and flip-flop our position here. But right now, I'm looking to be a buyer in the dip here in the dollar yen. I believe that a triangle has broken. We've traded a KYM setup, or broken resistance, now tested as support, as well as a swing halfway back long from a 95.80 anchor to this 101.60 lows. Let's go down to a 4-hour chart so you can see this trade, or see the support level that held. And then, of course, I want to go over in even a smaller time frame some of the levels and what happened today with FOMC. Alright, so we have traded into a full long from the 95.80 swing low to high here at the 160s. The long has traded. At properties, we use a 38.2 line as a first target. Those first targets would have been hit had you taken this trade with a stop below a 6-18 line. Taking half off at the 38.2 line, you would be net free with a stop below the 6-18 with a swing trade towards the 101.70s. Okay, I got to applaud Peter and Irish today for pointing out this full long. Not that I was only looking to be short the dollar yen. I was concentrating on the shorts because I wanted to get long after breaking them. And here's what I meant. from the 101.60 high to lows on last Thursday, we were holding a short on Friday and traded down and closed kind of near lows. We then opened up at targets, almost the inverse of the long that opened at targets in a gap up situation on the euro dollar. The dollar yen gapped down right into the 98.60 targets from the 99.80 short. After targets were filled, you take the entry highs to target lows for the next in the series short, which traded to target. We are holding, the short into FOMC today. FOMC came out, whoosh, straight down and into targets. Next in the series, entry highs to target lows, broke. Going down to a 15-minute chart to look at this break. Before this trade even broke, we had a micro series that you could barely see here. Trade and break. Upon the micro series breaking, it gave an ambush long. This ambush long traded to target. Next in the series, entry low to target highs, traded to target, went to and through targets, and now we actually have micro extensions that could potentially hold and continue as higher. Regardless, we have broken the series of shorts down off of highs into a long. We take the short off our chart, and we now draw up the ambush long that we'll be looking to trade here into the end of the week. And I'm a buyer now down around the 98.35 to 98.40 area for a swing trade long in the direction of the 101.74 targets in the near term, and eventually 108 targets. Doubtful I'll hold them that long, but hey, they're there. So currently we can watch this micro extension long below a 98.60. 665, we're looking for the 98.35s to trade, and that's where we'll be a buyer. Okay, we have orders out at the 98.36 right now. I feel comfortable kind of keeping them right at that 50% line, but because we're on and we're going to be actively trading this, keep in mind I'll probably pull those orders in. When we start getting within 4 pips of it, I will typically pull orders in. I don't mind front running by 4 pips. Okay. The euro yen I have not talked about in anything time frame smaller than a 4-hour chart. This is very intentional. We are simply continuing higher in a traditional after an extension long, and we have upside targets from a daily chart up at the 137.50s, from the 4-hour chart drawn from our 124.98 swing low to high. We are coming up on the 134.60 targets, and then narrowing it down to an hourly chart here, from the 129.90 swing low to high, we have held along and hit upside targets. So we want to draw now the 31.60 anchor to high, and this, if we see this pullback here, this 100 pip pullback in the Euro Aussie, that very well may be, the pullback in the euro into this 134.50 area as well. And that's if the dollar yen, kind of goes sideways. If there's a 100 pip move in the euro yen, dollar yen doesn't move, there's going to be the exact same move in the euro US dollar. Okay. Anyway, next in the series here for the euro yen is drawn from these 31.67 anchor low to 34.20 high. So we have 133 support on the euro yen in the direction of 134.60 4-hour targets, and in the direction of 137.50 daily targets. Okay. Finally, last but not least, the Aussie US dollar. I've had some really cool quick trades today on this one. Apologies if you couldn't get in them. They were quick. We posted them with at least 10 to 15 minutes before they actually traded, but D-trader clients of course got in them no problem. So what we're looking at currently, and step out to a daily chart here, and actually I will be bringing up a much larger time frame chart for the Aussie yen first, because this is a very important kind of series here I want to point out to everybody. So drawn from our 2009 lows to kind of highs here, we actually traded a full long off those lows right around the 72 area and traded 2 targets. We traded to targets, so now we're taking from those entry lows to target highs. We're drawing up a full, traditional long here that has now traded in the Aussie yen. So we have a second in the series traditional long having traded in the Aussie yen. It has upside targets of about 113. Okay, we broke the series of shorts, and I'm personally going to be a buyer, in the dips here now with a overall long-term discretion towards a 113. Most of the yen crosses are showing the same kind of like, hey, we want to really smack the yen. We want to sell. The yen wants to sell off, which means all the yen crosses will rally, and that's been pretty clear. And that is in my opinion, the market starting to price in the next big bond moves. In other words, interest rate rising. Interest rates beginning to rise now. Coming out of this recession, there's only one place interest rates can go is up, and the currency markets are ahead of the game here. Okay, and Aussie yen will ideally be one of the leaders to the upside, considering it's in a series of longs, and is just really looking quite spectacular at this point, and the reaction it's gotten off of this 88.70 area. Okay. Now going down to hourly charts. We are looking now for a ambush long drawn from the 86.40 42s to now today's high, I mean, this is, we're talking a 400 pip pullback, so it's not going to trade anytime soon. But what we are seeing, and what we can break down, is going down to a 15-minute chart. So keeping in mind that we have this 90.24 support level below us, going down to a 15-minute chart, we can actually see a series of longs that began off of lows, broke out of targets, began new extensions. This happened not this week, but last week we actually had the Aussie yen actually gapped up to a target from an extension long, drawn from the 89.90 94 anchor to its highs, traded into that level on Friday, gapped up to target on Sunday. So this is when we talk about doing gap analysis, and we look for the high probability areas for a market to move to. If it's going to gap, targets are almost always where we end up, and it's just like clockwork. So needless to say, that trade went to and through targets. We never began a new extension, never traded. It went straight through, and we traded directly back down into same anchor, new high of that original extension. And it seems like the Aussie yen is just going to squeeze higher in extensions here until eventually they fail and the market pulls halfway back long. Inside this extension, the market gave a traditional pullback. The tough thing about this pullback was it traded before the full short broke. So there was a full short here, valid short, or not valid, but a full short that was holding, that personally kept me from being a buyer in the Aussie yen this week, which is unfortunate because I want to get long in these types of trades, but I have rules to follow. If there's a short holding, I cannot get long a market where there is a short against me. I need to see that short break, and once that break occurs, then I can draw up the halfway back long to the highs where we've broken the full short. Unfortunately, that long didn't give me an entry. Nevertheless, not a huge deal, because we were able to reverse engineer the this original long that traded. It went to and through targets. After going to targets here, it immediately began extension longs, drawn from the 82, 84 anchor to highs, and we're going to go down to a 5-minute chart here. So this is the micro trend taking us up and into really these 84.50 targets from this larger hourly extension long from the 91.70s. Okay, Wow, that's a mouthful. So we witnessed this original long hold, and this is actually where we had two trades today, just today, two kind of scalps. And this was the original long. We didn't take this one. We took the next one after it hit targets, same anchor new high. We bought the 93.10s, stopped below the 93. 05, so we had a 93 stop there. There's a 10 pip risk. First targets were hit at the 93.20s, and we took profits here at the 93 48s, I think, is where I manually closed it. Otherwise, you would have gotten your 50 targets filled. After that target was filled, within we pulled a same anchor new high as you do with extensions, and then we actually bought the 93.18s down here. We pulled it in. I got filled, I think, some bad slippage, but like 93.22s to 24s. Anyway, pretty bad slippage on the trade, but that's okay because this all happened so fast. Doesn't matter. We got first targets filled, and then ultimately the trade went to the 93.60 targets. This micro has, we've broken out of these extensions now. We went 2 and 3 targets. So now we're looking for, in terms of micros that are taking us up to those 94.50 targets, we're looking for the 93.50 anchor to highs, a brand new micro extension long, as our prior extensions have blown out of targets, right? So we've got support now at the 93.80s. Below a 93.70 we can look to this original extension. But for right now, I'm watching for support here at the 93.80s, upside target of the 94.22. So it's not a bad little intraday scalp if you're nimble enough to take this type of trade. Not even an intraday scalp, little micro scalp for a move towards the 94.22s. Nice little 40 pip scalping opportunity here, which brings me to D-Trader. We need to update some orders here. Oops, I left the DAX way over here. Alright, so let's have this thing window, whatever, that works for me. Aussie yen 1 minute, bring this down to a 5-minute chart. Aussie US dollar 1 hour, that's fine. Dollar yen. Alright, well, that concludes our excuse me, that concludes our update for the London session morning recap. It's going to be quite a long video, so hope you guys have time to review it, but have a great morning, everybody, and we'll be back with you as price action develops.